It's not clear at all to me that things are going to slow down significantly in the near future. In 2005, I had a strong sense that the hot market would turn, and that when it turned, things would get very ugly. Today, I don't have that sense at all because
Hey y'all, Katie here with Team Evo AZ. Thank you so much for following us and listening to our podcast. Here is season 3, and we are super excited for this season. As you know, we are based in the Phoenix, Arizona area, servicing buyers and sellers throughout the valley. But what you might not have known is we are expanding nationwide. So if you know of anyone that might be looking to get into the real estate business or needs to buy or sell a property, but it is not in Arizona, we can still help. Please feel free to message us and enjoy the show.
Hey everybody, it's Katie and Matt again. Oops, I didn't even give you a chance to do it. I did it for you, my love.
Matt.
I was speaking for you. I don't ever do that. So it's totally okay that I did it today. But anyway, we are the real estate couple from, the married couple from the Phoenix area. And we do real estate. We talk here twice a month, actually. We're here. We missed last week because we were on vacation. So apologies, a little vacation week there, but we are back.
Needed it.
We are back, and we are back with Ryan and our monthly market update. Ryan, how's it going?
It's going great. Yeah, I was on a little trip as well. Everybody's doing their summer vacations, but good to be back.
Yeah, awesome. That's true. So in June, we didn't get to chat with you for our monthly market update, but that's okay because you were out having a well-deserved vacation as well.
Yeah, had a fun trip back in Boston, actually, but I know you guys were in New England as well.
Yeah, flew in and out of Boston, so we spent a little bit of time there too. So kind of funny that we went back to the same place. So anyway, let's talk about Phoenix. What's been cooking the last couple of months as far as rates? What's going on in mortgage, the mortgage world? What do you have to tell?
Yeah. So things have still been extremely busy, especially for us and my team here. And rates have been starting to trend downward actually over the past couple of weeks. And a lot of that has to do with some of the concerns with the Delta variant that's been going on, and some of the maybe slower to restart in the job market. So that's kind of impacted the stock market. As you probably know, on Monday we had a big drop. It was 800 points. It's really rebounded the rest of the week, but that really weighed heavily on interest rates. Actually, we did see a little bit of a drop this week, and we're starting to see a little bit of a trend downwards. So it's great to see. We're starting to see interest rates kind of average on the 30-year fixed conventional at about a 2.875. So we're back in the high twos right now. So I think that's got a lot of people looking to refinance, take some cash out, maybe start going out and after the kids are going back to school and start shopping for homes again. So it does seem to be picking up quite a bit this past week.
We've noticed the same thing too. So we noticed that, we spoke the last time that we spoke that things were kind of maybe cooling off a little bit. We thought we saw some additional inventory coming into the market. And we're still there. We're up a little bit in inventory, than what we were at to the beginning of spring and throughout the spring. We're up about 1,000. So as you guys know, every month I report on, just Pinal and Maricopa County single family homes. And for a while there, we were bumping around we were in the 2,000s, maybe bumping around the 3,000 range. And we're almost up about 1,000 from that. So a little bit more inventory out there, which is nice. It gives our buyers a little bit more selection.
Yeah, absolutely.
Yeah, and also we've seen a lot of guidelines kind of starting to lighten up a little bit. After when COVID hit, they really had to increase the guidelines to make sure that everybody's buying a house had proper employment, that they weren't going to lose their job. So there's a lot more, kind of restrictions in place for underwriting. But a lot of those are starting to be taken away. For instance, I know, Katie, we had kind of emailed about this, is that on FHA loans, they used to be pretty strict about student loans.
Yes.
Where if you had one in deferment, for instance, if you weren't making any payments, we still had to hit you with 1% of what your total balance is as your monthly payment. And that's pretty high. So people who had a large amount of student loans, that would really restrict them from buying if we have to go with an FHA loan. So they just came out a couple of weeks ago that if you're on an income-based payment plan, we don't have to hit you with that 1%. We could use what your income-based plan is as your actual payment. Or if you're on deferment, it's only 0.5% instead of a full percent, which really does make a difference. So we've actually had a few clients that we called back that were pre-approved with FHA that I knew had student loans, and we were able to increase their pre-approval amount by 20 or 30,000. So,
Wow.
which makes a huge difference in this market, obviously, get as competitive as possible. So that was a big update that we had a couple of weeks ago, and it's it's really helping a lot of our clients out.
That's good to hear. Are you still hearing some chatter out there about this being a real estate bubble and people kind of freaking out about that? Are you running into any of that at all?
We do, yeah. A lot of national news outlets are still kind of talking about, hey, are we in a bubble? Are we in a bubble? Just because we've seen home prices just shoot up so much in the past 2 years.
Mm-hmm.
And for what we're seeing, it's not showing any signs of slowing. Like you said, inventory is up a little bit, but really we're still at historic lows with inventory, and demand is doing nothing but increasing right now. So we still have that supply shortage. And we do have, I know we had spoken on a past podcast where the millennial generation is hitting their mid-30s right now. And since the baby boomers, that was one of the largest generations out there. So they're really starting to flood the market, and they need this inventory. But I still don't think builders are going to be able to build homes fast enough, at least for the next couple of years, to really keep up with the amount of demand that's coming. So I do think appreciation will slow down a little bit, but I don't think we're in a bubble. I don't think things are going to drop.
Totally agree with you. And I love everything that you said. I know that I've talked about this before on previous podcasts. I love the publication Keeping Current Matters.
Yes.
And so there was this great article that they just released. Let me share it here really quick. That talks about pretty much everything that you just said, because I'm hearing that a lot, from our clients, from our followers. Hey, are we in a bubble? And people are getting a little bit nervous about that. But this was a really interesting article. I will actually share the link here in the show notes so that you guys can access it. Our listeners can access it. But it's really hit on the top 3 reasons why this isn't a housing bubble. And it's really everything that you said. It's not being driven by risky mortgage loans. We know there's a lot of cash out there. There's people who are actually qualified to purchase these properties, right? Homeowners aren't using their homes as ATMs.
Yep.
Like they did back in the day. What are you seeing? What are you seeing homeowners doing with their equity when they refinance? Are you seeing a lot of just rate and term refinances? Are there cash? Is cash out happening? What's going on with that?
Cash out has been popular, and people are looking on Zillow. There's so many different websites you could go onto that will give you a pretty good idea of where your value is. And they're like, oh my gosh, I have this much equity. But, a lot of what our clients are doing, instead of just taking out and buying boats like we saw back in 2006, they're actually consolidating debt. That's the majority of what we're doing with our cash out refinances. So they're taking money out, paying off some credit cards, student loans, car payments, and saving $200, $300, $400 a month on their total monthly expenses. So it seems like, this time around, people are being a lot more smart about what they're using their equity for, and really consolidating their debts.
Yeah. So that time frame taught us something then.
Yes.
We learned something from the past. And then the third one is just what you said. This time it's simply a matter of supply and demand, brings up, millennials. And then also, if you look at this chart, I thought this was really cool. It shows you the single family housing units completed by decade. And so it goes all the way back to 1970, where we had 11 million homes that we had built. And then if you come all the way across the chart now to 2010 to 2019, which would affect us right now, we were half that.
Yeah, I think a lot of that has to do with what happened, with 2008-9 when the market crashed. The builders were nervous that, they didn't want to build a whole bunch of homes and then be stuck with them. And, foreclosures were happening again. So that's why that decade was really so slow with home builders. And now we're way behind.
Way behind.
There was definitely a lot of inventory that was out there that needed to be remodeled. You know what I mean? If you really look at what we did in the housing market from especially 2009 to 2019, if you didn't hear the word flip, you were living in a cave.
Yeah.
And exactly that's what happened. I think, especially in places like Phoenix, in these areas that are having the slowdown in new builds, you're probably seeing a lot of value adds. And value adds, for people that aren't familiar with that term, are people that are adding some square footage to their existing home. So instead of saying, hey, we're in a smaller 3-bedroom home and we want to jump into the market and sell it, maybe, let's just add 1,000 square feet if your lot permits it. You see this happen in places like California, places like Chicago, some parts of New York, places that have had historically higher real estate markets where that supply and demand was, always there. So it's going to be really see how that plays out here in Phoenix, especially what we're currently dealing with. Another really interesting thing that I was reading and hearing about, which it gives me hope on all of this front, is our rents, our rental markets. Everyone was kind of scratching their head and looking at even 3 months ago saying, hey, is this going to continue to go up? Well, they just released some more data here in the last 15 days stating that it's jumped even higher, which when you hear that just means, and what they attributed it to was people that just couldn't get into the market or felt like, hey, we don't want to deal with this anymore, so let's just rent.
Right.
Those are people that are going to buy. These are those millennials that you were just talking about, Ryan. And it's not like they're just hanging up their hat and saying, we're never going to buy. No, they're just taking a break. Yeah. But the thing that I found is confident, inspiring, was the fact that they're willing to pay these rents, these rental rates, which is extreme. I'd say a very, very good sign for a healthy market, because if people can afford to pay this as rent, it's not like the floor is going to fall out from beneath us if all of a sudden, the housing market takes a little bit of a break, as far as resale goes or new builds. I'd just say that's a good indicator that people have money. People have money and they're willing to put it into the place that they live.
I agree. I, in fact, just had a millennial this morning that dropped out of the buyer game. We've been working on it for a couple of months, and she got a real great opportunity from a family member to rent for another year. And she's just kind of hanging up her hat. She's going to watch and see what goes on. She's going to save a little bit so that maybe she can increase her purchase price when she's ready to turn around and jump back in. Just to finish up this Keeping Current Matters article here, I thought it was pretty interesting. They always bottom line these things. So at the bottom, they bottom line it, and they're taking a quote from Bill McBride. He's apparently the author of Calculated Risk blog that predicted the last housing bubble and crash. And he says specifically here, it's not clear at all to me that things are going to slow down significantly in the near future. In 2005, I had a strong sense that the hot market would turn, and that when it turned, things would get very ugly. Today, I don't have that sense at all, because all of the fundamentals are there. Demand will be high for a while because millennials need houses. Prices will keep rising for a while because the inventory is so low.
Can't agree with that more. Yeah, absolutely.
We talked about,
right. And I have to tell you, so speaking of New England, where we just got back from, I'm from this teeny weeny little town in very northern New Hampshire called Berlin. Okay. There's maybe 7,000 in population. Back when I lived there was maybe 9. So super teeny tiny. Real estate never really did much there. It doesn't really go up. It doesn't really go down. You put your house on the market. It could be on the market for a few years. It just depends. Wow. Their market is so swift and climbing so quickly right now in this little rinky-dink town in northern New Hampshire that it just cleared it all up for me. It's like the entire country is feeling this. There is such low inventory. People are actually moving there.
In your small town, huh?
Yeah.
I love that you mentioned that. And Matt, you were also talking about rents and everything too. And we've had a lot of clients recently. It's really increasing demand because the rents are increasing. They're like, hey, my lease it was expiring, and now they're asking $300 more, $400 more. Yeah. And a lot of them are just sick of it. They're throwing their hands up like, I'm sick of renting. We need to buy. And they're getting a lot more serious about it. So I just kind of back at what you were saying, Matt, about rents increasing. I think that's really going to increase demand. So yeah, I agree.
And one of the things that I like about that is that you think about the people that are going to pay these higher amounts for rent. They're not naive. They're smart people. They're not making emotional decisions. They clearly have enough money to afford, $2,000 plus a month for rent on a regular home. They're prepared. And as these rates and rents go up, if all of a sudden we'll say interest rates go up here in 2022, they're almost going to be prepared for that increase because they're already paying that on their rent. So for them to really say, hey, you know what, maybe inventory has creeped up a little bit. That product, that dream home that I want to match all my emotional and financial needs is there. That's palatable because what I'm paying for rent. Whereas before, we've never been in this position in Arizona because rent has been so grossly different than where mortgage prices were. There was never really a correlation. Now there is. If anything, rents are higher than mortgage prices, which is something I haven't seen in almost 2 decades here.
Yeah. So to bottom line it like KCM does, if you're holding off in the market for prices to go down, you might be waiting a minute.
Yeah.
And one more thing I kind of wanted to add here, what you're kind of seeing on the news is affordability. That's why people are kind of thinking we might be in a bubble, is that, median home prices, they're at all-time highs right now. And are people able to afford these prices? And I put some of the numbers together and I wanted to kind of go over that. Because basically you're considered house poor, like your home, what you're paying for your mortgage is too high if you're paying 28% or more of your gross income towards your mortgage. But by the numbers, if you look back in 2006, the average purchase price was $251, but the median income was $48,000 at that time. So your actual percentage of your housing was 31%. So that's considered house poor. But if you look now, prices went up. The median or average is about $375 right now nationwide. So the median income though is about $80,000. So when you look at that, that drops you to about 26% as your housing ratio. So you're actually it's okay. You're not house poor at this time. So though prices are going up, wages are going up with it. Right. And so the affordability is still there.
And kind of to bottom line, where you just said wages are going up.
Right.
I was reading this article the other day, Bill Akerman, he's a billionaire investor, but he had something to say about especially our fall here nationally. He's very confident that our economy is going to continue super strong into the fall, into the retail months, and even this, Delta variant, it's not going to play a role in things, especially as far as the stock market's concerned. His last thing he said was really interesting, that the lack of labor right now, because people are not wanting to return to work, is going to be naturally affected by employers finally deciding to pay more in wages.
Yes.
And while that might be a short-term issue, it's actually really good economically for the long term. And you just said it. So it might be a bit for employers to finally say, okay, we're going to have to pay more to get more employees to get better service. But in turn, by paying them more, there's more money injected into our economies. People can afford more homes and such. Mm-hmm. I think Arizona shines its light because we're fortunately enough to have such a strong economy and kind of, we'll say are looking to the future for the next 2 years, that employers are going to be able to make this investment and strengthen our labor pool's baseline, which is, I think, awesome for the future.
Totally agree. Yay, Phoenix. Bottom line, right? We're bottom lining it today. Bottom line is yay, Phoenix. Go out and buy some houses. All right, guys. Well, thank you so much for your time today. People, audience members, listeners, if you're interested in being a guest on the show, please follow us at Team EvoAZ. That's our handle, at Team EvoAZ. We're on YouTube. We're on IG. We might be on TikTok. I'm looking over here like, are we on TikTok? But definitely on Facebook. And then, of course, evoaz.com. Hook up with us, follow us, like us, download our podcast on your favorite podcast platform, and shoot us a message if you are interested in being a guest on the show. All right, guys. Well,
thanks, Ryan.
Thanks again.
Thank you. Thanks for having me.
Bye, everyone.
Till next time. Bye.
All right, bye.